Everybody interested to know what time frame they should be trading: 5 minutes, 15 minutes, 1 hour or 4 hour. But only few knows how to timing the time frame. But to solve an equation that only knows by 1% traders, one must know how to timing the time frame. Probably you have heard of a lot about the time frame. Probably you haven't heard of about timing. If you haven't heard of, definitely this video will change the way you look at the market, because it's not all about time frame. If I give an example, let's say the candle that you can see on the chart, one of the candle form in early Asian session. This is the 15-minute chart, and the other candle form in NY session. Both of the candles looks almost similar, but they had a very different volume in it. Okay, you might say, okay, I'm gonna use the volume indicator. In fact, volume also may not give you proper information. Now, this is not only my opinion. If you look at Google, then what you can see that why doesn't Forex shows volume? Calculating volume in Forex trading is complex, as there is no one source of data on the currency market transaction. So when you see volume displayed on a price charts, they are typically only the transaction for that broker or exchange you are using, rather than global trading volume. So that means that when you put your volume indicator on the chart, you only can see the volume of that particular broker or platform that you are trading, not the global volume. So it is very difficult to find exact volume on a particular time in a particular candle. So therefore, what is the solution? Well, this is what I'm going to show you today in this video, give you a clear idea of how to timing the time frame, so that you can be on the equation that is only known by 1%. If you're excited to know about it, make sure that you smash the like button here and also hit that subscribe button if you haven't done yet. Without further delay, let's get started. Okay, so before we go to the point of finding clues how to timing the time frame, let's first look at to see why in fact you need to timing the time frame in the first place. Imagine that there is a session has started, either could be Asian session, Tokyo, or London or New York session. So every session starts and it ends, but if you look at the market, you will see that the market trends or the volume comes in the market in a very short period of time. It's less than 10% that I would say that when the volume comes. So if you look at that session, this is the starting of a session, and you'll see that the whole session the market remained flat or sideways, and during that time any traders trading, in most of the time you'll see that the trader lose money, but only in a very narrow window the volume comes in the market, the order flow comes, and suddenly the market breaks out or break down and started to trend. And those who are lucky enough understand this zone where the real volume comes in the market can make money in the market. But majority of the time you will see the market moves in a sideways or doesn't move properly with a trend that in fact doesn't bring any profitable trading opportunity. And this is the biggest mistakes majority of the trader does when they become impatient. They started to trade in this slow market, which in fact doesn't have any volume. So the timing is very very important when you know that when the market is breaking out or breaking down, getting into the trend, and then finding the trade and closing the profit before again the market started to range bound. So now let's look at a couple of examples and clues that you can use to find the proper timing when the market is trending. Okay, traders, so let's find our first clue, which is the most important clue to find the timing with the time frame. So the first clue is when the market consolidate with a smaller candles for an extended period of time, the time frame that you are trading. So I can give you an example that you can see here on gold. This is the recent chart, and where we can see that this is the 15-minute chart on gold, and as you can see, gold was consolidating with the extended period of time in this 15 minutes time frame with a smaller candle formation. So we have seen that quite a few smaller candle formation, and the market was consolidating for an extended period of time just to see that it has broken out with a very strong impulse with the high impact news. Now this is the primary clue that can be used when the market started to consolidate before any high impact news, and then suddenly breaks out with a very strong impulse from that consolidation, where the high chance that the market will make a big move in the direction of the breakout or the other direction. Here the most important part is to know that the market has broken out. It is most likely be trending in the major direction of the trend. And as you can see with the news, the market has broken out completely to the upside, and if you look at the candlestick pattern in comparison with the consolidation pattern, it's a huge breakout. And finally the market started to trend with aggressive momentum in the direction, and it in fact dropped a lot to the downside. Now the best timing is to wait for the breakout to happen and then wait at least 15 minutes for the market to settle, and then to find proper entry opportunity. Now when it comes down to the entry opportunity, it is important that always you look at the proper price action confirmation. Now in my strategy in Forex Trading Wizard Academy, I use a liquidity candle finder that helps me to find proper entry opportunity after this kind of breakout, which has given a high probability edge in the market before we enter. By the way, if you want to access all the tools that we are using in Forex Trading Wizard Academy and also be part of this trading community where you can learn and grow as a trader with me, also you can find link below this video in the description area where you can join us to be part of the trading community, where you can access all my trade, access all the trading tools, and also access all the courses that is available to help you to grow as a trader. Okay, the next clue that we can look at is before the starting of a session and at the end of a session. So basically when we see that a session is preparing for an ending and also starting another new session, during that time period the market remain very volatile, and during this session time is where we could see a very high volume in the market. So for example, before the starting of London session, around 30 minutes prior till as soon as the session starts, and around 30 to 1 hour time, during the time frame the market remain very highly volatile. And during that time frame, when you see the market is breaking out of the structure, this is where we can look at for the market for potential trading opportunity on the lower time frame. And these are the clues that we can use to find high probability trade setup during a lower time frame trading opportunity. I believe that traders, you enjoyed this very important lesson and you found value in it to find out when to look for the trading opportunity on the lower time frame. If you want to know more about understanding about our strategies and also learn to trade with us in Forex Trading Wizard Academy, also don't hesitate to join us. You can find link below this video in the description area. You can visit the website and join us to be part of the trading community. Thank you, and I'll see you soon again trading live together. Until then, stay well, stay happy.